Hey, it's Todd Pacific Residence Partner. So we're halfway through 2023 and there's a bunch of questions that continue to come up. So I wanted to share some of the questions that came up in the first half and try to answer those to help you plan for the second half. Okay, so here's myth number one. Do I need 20% for a down payment? So let's take a look at this in detail. So this is one that comes up time and time again, and a lot of it is perpetuated with the media thinking that everybody's got to have 20% down. The short answer is no. So according to the National Association of Realtors, the average down payment in 2020 was just 7%. So that's a far cry from 20%. So there's various programs out there still, like FHA, which requires a little as 3.5% down, as well as conventional, which is 3%. The Urban Institute reported that a year ago, nearly 60% of new mortgages had down payments of less than 20%. So really, the truth is more purchases result in less than a 20% down payment. So let's keep in mind that if you put down less than 20%, you're going to have private mortgage insurance, and there's going to be some other factors and costs in mortgage insurance. And one other thing too is we are still seeing a number of lenders that offer 100% financing, and in some cases above 100%. So that's certainly one myth that is out there that cannot be more untrue. So myth number two, I need perfect credit to purchase a home. Here's another one that keeps coming up, and this one is a little bit inaccurate, as well as it's really changed dramatically over the first half of 2023. So most people think I've got to have a perfect credit score of, let's say, 740, 720 to purchase a home. That's not the case. So according again to Ellie Mae's Origination Insight report in 2021, the FICO score average on all closed loans was 753. For FHA loans, which catered to lower credit and lower down payments, the average credit score was 670. So again, we're not even talking about near 700. We're talking about upper to mid 600 scores. One thing that we saw significantly change this year was how Fannie Mae looked at and evaluated lower FICO scores. So what they've done is they've lessened the gap significantly in pricing and cost, where lower FICO scores are not penalized nearly as much as they were in last year. So that's another huge advantage. Lower FICO scores do not disqualify you from purchasing a home. It's actually improved a lot for lower FICO scores based on the first half of this year. So here's number three. Rent is always cheaper than buying. Here's another one that keeps coming up over and over again, and based on the media, you would be extremely confused. So is renting always more affordable? Not necessarily. So again, according to a 2021 report, owning a medium-priced 3-bedroom home is more affordable. All right, so here's myth number four, and this is the last one. The best home loans are always the ones with the lowest interest rates. So when you're shopping for a home loan, you can gravitate towards the lowest interest rate, but that's not always the best option. And again, this can depend based on where we are in the economic cycle, whether interest rates are at a higher level, a lower level, or somewhere in between. So what you do want to do is really consider the annual percentage rate, or the APR, which is really going to factor in all the costs associated with borrowing. Sometimes a loan can have a slightly higher interest rate, which may actually lower the APR due to lower fees. The other consideration is the current market. And right now, in this current market, we're really taking a contrarian approach when we advise all of our clients. And you want to consider using rebate pricing in a lot of cases too, because that's going to create a better opportunity in the short term. And it may be best to really focus on the short term than the long term. And that's very contrarian, because typically you want to look at the long-term effects. But when rates are at a 40-year high, there's a greater propensity for them to decrease, which means that you want to factor in some other considerations and not just look at it from a long-term perspective. Looking at all the options can be really important, especially when you look at all the options compared to longer-term and shorter-term objectives. So according to the CFPB, nearly half of all mortgage borrowers didn't even shop around for a mortgage. So you not only want to look at the short-term options, but you want to make sure you consider all the factors for your best home situation, as well as comparing different lenders. So make sure that either you're working with a full-service mortgage broker that works with a multitude of different lenders in real-time pricing, or you work with at least 2 different retail or bank lenders to really compare all your options. And again, I would emphasize looking at shorter term options, which would reduce costs in the shorter term, maybe have a slightly higher payment, but I think based on our economic cycle, that's going to provide the best solutions over the next 2 to 3 years. So make sure you follow us on all of our social channels, and make sure if you have any further questions that you let me know right here. Thanks so much.